On a Monday, Wall Street closed with minor losses. Amid the lack of market catalysts, trading sentiment turned sour. However, things are different in Asian markets. Asian stock indexes are extending their growth. What is going on the currency market? A few days are left before the year's quarter. Financial markets are whipsawed by recession fears and concern about aggressive monetary tightening by major central banks. Yields of US Treasuries grew yesterday in light of upbeat data on pending home sales and durable goods orders. Importantly, US durable goods orders have been rising for 3 months in a row. It means that plans for future business spending remain ambitious despite soaring inflation and high interest rates. On a Tuesday, yields of benchmark 10-year Treasuries grew to 3.18% in the Asian session. Besides, yields of 2-year Treasuries that are especially sensitive to traders' expectations of rate hikes have climbed to 3.09% today. The US dollar commonly benefits from a rise in yields of US Treasuries and a decline in the stock market. Nevertheless, the greenback is deeper inside the trading range between 103.77 and 104.02. Why? Investors are again evaluating further interest rates in the US and the pace of the Fed's rate hikes. The currency market responded to a fall in oil and commodity prices. Some economic indicators signal that the US economy might be already losing momentum. Let's assume that the US economy is slowing down and commodity prices are sliding. Perhaps the US Fed will not have to tighten as aggressively as projected earlier. While the market is digesting the situation, the US dollar index is consolidating and trading at about 103.87 at the moment of recording this video. Japan's economy seems to be slipping into inflation, which is not as rampant as in other countries. Today, the Bank of Japan reported an uptick in the annual core CPI to 1.5% from 1.4% a month ago. Notably, the central bank views the situation with tranquility. The prime goal in the monetary policy to sustain zero yields in government bonds. The regulator hopes that the yen will strengthen in a parallel to growth in wages. All in all, the central bank reckons it will manage the flexible monetary policy. If this scenario comes true, the dollar-yen pair is expected to drop. For the time being, the currency pair mainly depends on the yields of the US Treasuries. The Bank of Japan has not signaled yet that it's going to revise its monetary policy. Thus, yields of the US Treasuries serve as the catalyst for the dollar-yen pair nowadays. If the yields go up, which is happening now, the currency pair could climb as high as 140. In the Asian session today, the dollar-yen pair also traded higher and rose to 135.78 on the back of rising yields of US Treasuries and the US dollar's consolidation. The pair oscillated in the corridor between 135.08 and 135.84 during the Asian Pacific session. Let me warn you about a high volatility in the currency market this week. The second quarter and the first half of 2022 are coming to an end soon. In this period, most stock managers are revising investment portfolios. Such revision allows investors to restore the balance between risk and yields of a portfolio. Speaking about Australia, inflation risks are a consequence of the implemented rate hikes of 0.25% in May and 0.50% in June, and further rate hikes by the Reserve Bank of Australia have dampened business sentiment for the second month straight. The survey released today showed that the business sentiment index lost another 2.9 points and fell to 97.3 points. The AUD/USD pair traded in the tight range between 0.6916 and 0.6966 in the Asian session today. The Aussie seems to have got stuck in the trading range. It will trade sideways until a high-impact event happens. This event should influence the US dollar as the greenback is setting the tone for this currency pair. The trading instrument could break 0.6868, the low of last Thursday, with a further decline to support 0.6800. Alternatively, if the Aussie gains ground, the pair could climb to 0.6994, the high of last Tuesday, with a further rise for resistance of 0.6950. At the moment of recording this video, the pair resumed its growth and approached 0.6951. Investors take the rally of last week with a pinch of salt. They are alarmed by a looming recession in the United States that was confirmed by Jerome Powell in his testimony last week. By and large, investors are pessimistic in light of recent dismal economic data and due to the fact that the US Fed gives priority to the struggle with inflation. We wish you handsome profits under any circumstances. Keep close tabs on financial markets on InstaForex TV channel. Stay tuned with us and see you soon.